Hello, everyone. Welcome back to my weekly price action based technical analysis series. In this edition, we will be unraveling potential trading opportunities from the USD JPY's current market structure. But before we begin, let's take a quick look at the outcome of our previous technical setup. Last time, we nailed some impressive moves, seizing opportunities on both sides of the market by capitalizing on both sell and buy position. So, at the beginning of last week's trading session, we had this situation here where price action was initially caught within the 141.800 and the 141.350 to give us an indecisive phase at the beginning of the week. It was more of selling the USDJPY at on Monday as we saw price broke down that support line. Of course, we had some modest size of profit as price action snapped back into our entry. We had some selling more sell positions, but unfortunately that went into a stop loss before we finally saw another sell position right here on Wednesday to give us over 400 pips in profit from four positions. Then on the next key moment didn't come until on the 27th and 28th. That was on Thursday stroke Friday when we begin to see buy pressure resume as a result of the positive GDP data from the US economic docket. So we had the privilege of joining the first momentum, which failed before the second one kick-started on Friday, giving us over, I think we had about 200 pips on that one before the week closed. So it was quite an interesting week for everyone in this community. And if you are interested in reviewing this commentary for educational purposes, you can find the link in the description box below. If you are watching from my YouTube channel, you will see the link at the top right hand side of your screen. So before we proceed, a friendly disclaimer. This analysis is for educational purposes only and not a financial advice. Always exercise cautions before making trading decisions and consult with a professional financial advisor to assess the suitability of your situations before making any investment choices. Having mentioned that, our analytical approach in this video will revolve around using simple yet powerful parameters such as trend lines, key levels, and of course chart patterns to uncover valuable insight into the historical price movement of the USDJPY. With the groundwork laid here, let's dive right into the business. So the first thing I was able to do here was to go into the daily time frame where I want to see things from an holistic standpoint. And the first thing we will observe here since the beginning of this year is the fact that price action has been very, very bullish. And in fact, to emphasize the strength of the buyers in this market, I was able to identify a couple of trend lines which has been supporting that bullish momentum since the beginning of this year. So I have the major ascending trend line here after connecting the series of higher lows. Then we saw a deviation happen in the month of February. As you will see, this trend line is the recent one that has been supporting that bullish momentum in the last 4 to 5, 6 months now. With this situation we have here, it is quite obvious that price action is very bullish. And if we take a closer look into what has been going on in these markets in the last 1 month, you will see that as soon as price action tested that high at the 145.00 level at the beginning of this month, we saw the strong impulsive move to the downside. Now, one interesting thing about this situation is that as soon as price action tested that ascending trend line, we saw a sharp rejection of that zone, giving us this first move into the 142.00 level, a strong psychological area considering the round figure of that price. Then we saw last week that price action came back again into that ascending trend line to give us a sign that price is likely going to be respecting that ascending trend line one more time. As you will see, we saw sharp rejections on both Thursday and Friday to give us a situation where it is likely that price action could transition into a potential reversal pattern in the form of a double bottom structure to incite a reversal setup going into the new week. In addition to this pattern, here is this key level at the 142.00 area, which of course has been a major determinant of price action since the beginning of this month. Now, with the situation we have here, are we going to be seeing a breakout of the 142 to confirm a strong reversal pattern that will incite an uptrend continuation? Or is price action going to drop below this the ascending trend line to incite a sell off in this market? I want us to take into consideration the fundamental factors that could likely affect price movement in the coming week. And in that regard, we want to be checking on the economic calendar. As we all know, these fundamental factors often manifest on the chart in technical patterns and price movement. And by monitoring the economic calendar, we can easily identify potential correlations between key economic releases and, of course, specific technical patterns. And for the economic calendar for this week, we are going to be focusing on high impact events from the US and the Japanese economic docket. But from what we have here this week, it appears that we are only going to be seeing high impact event from the US economy. The first one here is coming on Tuesday, August 1st, and that is the ISM Manufacturing PMI. And then the second one is on Wednesday, August 2nd, the ADP Employment Change. And on Thursday, we have the ISM Services PMI. And on Friday is the average hourly earnings month on month and year on year. Then now we have the almighty non-farm payroll, which also comes in on that same day. So we have a handful of high impact events to look out for. And of course, participants in the market will be anticipating this event, which of course would reflect on the chart as price action. Now, with that being said here, let's dive right into the 4 hours time frame where I was able to identify a couple of structures here that we are going to be using. So the first one here is the fact that since the beginning of this month, we can see how the 138.00 level had continued to serve as a very strong demand zone for participants in this market. As you will see, every attempt by the sellers to break through the structure has been met with strong resistance from the buyers, sorry. And you saw what happened here last 2 weeks ago, and we saw what happened here last week. Now, with the situation we have here, we have a very strong demand zone which could serve as a platform to incite an uptrend continuation. Besides this demand zone, I also noticed that since price action tested the high at the 145.00 level, we can see we have a descending trend line after connecting the series of lower highs. But in as much as we have a lower high here, it is quite clear that sellers are yet to find a new low that is breaking down this 138.00 level to give us a confidence that we might likely be selling. But the fact that we have been seeing higher lows here could be a clear sign that price could likely break out of that descending trend line this week. Now, to help us guide our position for this week, I was able to identify a key level which I'm going to be using to serve as my yardstick for trading activity this week. And that key level falls along the 141.00 level, which of course has been a major determinant of price action since the beginning of the month of June. And right now, price is back into that zone, which also shares a confluence with that descending trend line. So, as we have a key level here, you know how we use our key level. If price action remains above the key level, we want to be looking out for patterns and structures that will support the idea of buying that asset. Now, I'm of the opinion that with higher lows and a very strong demand zone, we are likely going to be seeing price breakout to retest the 141.00 level to incite an uptrend continuation. And if we are going to be considering selling at this juncture, it is very important that we see price slice through that demand zone, taking out all the buyers around that area to give us a signal that we might likely be going bearish. So this is where my center of focus is going to be for this week, as the 141.00 area will be where we shall be looking at the beginning of the week to see how the market participant will react to that level to give us an insight into how we are going to be positioning ourselves for the week. Trust me, I will be with you in the comment section to give you an update on what I think will happen after monitoring how price action will be reacting to that zone. If you have found this content helpful in making your independent trading decision for the week, I would greatly appreciate your support by giving the video a thumbs up. Your likes are valuable to me and helps the algorithm promote the video to a wider audience of traders who may find the material beneficial. Thank you in advance for doing so. If you haven't already, I encourage you to follow me on this channel for more of this content. By subscribing, you would always stay updated with the latest ideas I share and, of course, receive notifications whenever I upload new videos and commentaries, of course. See you in the comment section on Monday morning as we get prepared for the new week. Do have a wonderful evening, everyone. Bye bye.